Good to see you, Marshall.
Good to see you.
Thank you so much for sharing your time. Now, according to the latest report coming out of IMF, relative to forecast in April, growth 2025 in China has been moving upward 0.8%. Tell us what is really behind this. Why at this moment?
Yes, the upgrade in our projection for China's growth is due mainly to two factors. First is a very strong data in the first half of the year. And second is lower tariffs than we expected in April. So growth in the first half of the year was 5.3%, very strong. And that is boosting our projection for the whole year. Secondly, net exports are performing very well for China, and that has helped boost growth. Some fiscal stimulus has helped boost demand. The trade-in program, also clearing local government arrears, has helped with demand, but it still remains weak, in part because of correction in the real estate sector, which is suppressing household consumption and confidence.
How do you see China's trade in terms of its contribution to the national economy, and as a result, the growth of the Chinese economy, as the IMF earlier suggested in the reports?
So yes, net exports have contributed significantly to China's growth historically and recently. We do expect that contribution to lessen in the coming quarters, and that will contribute to our projection for the year as a whole, which is 4.8% lower than the first half. And we'll continue in our projections going forward. So we do see growth slowing in China next year and in the years after that. Without further reforms, we would foresee growth slowing to as low as 3.5% in the medium term, say in the next 5 years, due to the aging population and slowing productivity growth.
Expanding a domestic demand is a big issue, as you know, and can be done overnight.
Well, we certainly welcome the increased emphasis placed on boosting consumption and domestic demand generally. Many of the measures are new, so we look forward to understanding them better and assessing their impact. But you're absolutely right, it is a key objective, and one that we encourage the Chinese authorities to remain focused on.
From IMF's perspective, looking at China's economic growth, how do you see the relations between the private sector and now also China's growth potential?
So these are very welcome steps to encourage private sector development, which, as you say, is a key for future economic growth in China. It's important to foster a clear, predictable, and transparent regulatory environment for private business. And we're looking at the measures taken so far. We think there's more measures that could be taken to encourage that going forward. We're developing a range of proposals to encourage private sector growth, including leveling the playing field between state-owned enterprises and private enterprises, leveling the broad-based structural reforms that give every enterprise an equal chance to succeed. So that's one of the key focuses.
The other thing is innovation.
Yes.
That has been quite a dynamic area. You know, AI, robotics, and the list goes on. But just how much will that contribute to the potential of the Chinese economy?
Artificial intelligence. It does hold immense potential to boost productivity growth if it's adopted in the right way. We've estimated in recent World Economic Outlook research modeling that it could increase global growth by as much as 0.8 percentage points a year if it's adopted in the right way. At the same time, it does raise concerns about job losses and potential increase in inequality. It's important to establish good frameworks for its adoption. You want a regulatory framework that incentivizes companies to adopt AI in ways that's safe, in ways that promote human employment as well as investment in machinery and robotics, and ensure that it's used in an ethical way. So these are challenges that people are just starting to grapple with now.
Marshall, you know, one of the things that we have witnessed over the past few years about the global economy is its fragmentation. What factors do you advise industries and analysts to watch even more closely when it comes to how China interacted with the rest of the region and the rest of the world?
We would take a global approach to this and encourage the maintenance of an open trading system. So you mentioned fragmentation. The IMF has done research on this in previous World Economic Outlooks, and we found that it could be very costly and in particular hit smaller economies very hard. So everyone has an interest in maintaining an open global trading system.
Well, as we talk, China and the U.S. just wrap up its latest talk by two professional teams on both sides in Stockholm based on their earlier interactions in London and also in Geneva. So as the IMF rep here in China, your thoughts on the latest results?
Yes. As we mentioned in the latest WEO update, in this current environment of elevated trade tensions, countries should reduce the policy-induced uncertainty by promoting clear and transparent trade frameworks. And for our latest projections, we have assumed the trade policies that are in place at the time of writing the update remain in place. And any improvements after that would be positive.
In order to encourage economic growth, what would be the IMF's advice for economies as to how they can better handle the tariff issues or their trade issues?
Yes, so as I said before, it's important to maintain the open global trading system. We believe that this benefit.
What is open?
Open is fewer trade barriers, tariff barriers, non-tariff barriers, to reduce trade tensions, to find a level playing field. And we believe that this will promote growth overall. And in particular, trade tensions and trade barriers are costly not only directly, but indirectly due to uncertainty. This can be just as costly as the barriers themselves. So we are encouraging all the major economic powers to address trade tensions and find trade settlements that lower trade barriers and maintain an open system.
We have seen debts in certain regions of the world rising as a result of different factors. So what would be your advice, in fact, or your observation about this?
So the IMF does advise a number of countries in the world to look at fiscal consolidation in the medium term to put public sector debt on a sustainable path. And that includes China in the medium term, while in the near term, some fiscal stimulus makes sense given weak domestic demand. There is a need in the medium term to have fiscal consolidation consistent with growth and boosting demand, to bring it onto a long-term sustainable path. So that's true of many economies in the world.
Here, living in Beijing already for almost half a year, I'm sure, Marshall, you have felt the momentum of this place. What is your personal, observation about the dynamic here at this moment, and how does that, in a way, can contribute to your future work of looking at China's economic realities and potential?
So it's been very exciting being in China after having visited many times in the past and seeing the progress over time. So that's been very impressive. In terms of our future work here, it's important, I think, to buttress confidence, to ensure that the private sector, both Chinese and foreign investors, are confident in the Chinese economy, in the regulatory environment. So I think that the dynamism that's been in China for the past few decades needs to be nurtured for the future, and if so, we think that strong growth can continue in China.
Yeah. What is your plan while being here? What are some of the areas you would love to, whether it's personal interest or represent the office, look into more in terms of China's economic growth?
It's a very big country, and I'd like to understand the full range of the country. So I'm looking forward to seeing a number of regions along the coast, in the interior, in the west. So that's one of my goals.
To figure out what is real China,
yes,
right?
well, and to have a fuller sense. I mean, there's I'm sure there's many real Chinas, and it's all real. But to have the full range, and not have just the impression of Beijing and Shanghai, which are important, but not all of China. Another particular interest I have is to look at some of the issues you raised about how businesses are developing in China, the dynamism of the business sector, new companies coming in, what happens to companies that are less efficient. Are they bought out? Do they exit industries? So I think this will be a key issue in China going forward. So it's something I'm looking into, and it's connected to innovation that you mentioned earlier.
We have seen Chinese companies, whether it's public or private, are going through this very turbulent and yet exciting time. On the one hand, there is geo-economic changes, there's trade environment changes, dramatic, but at the same time there's also innovations, such as in the green area, which China has been certainly a world leader, and also in the AI, China has been one of the leading factors in terms of innovation. So all of this, all at the same time, how this is likely to change the future dynamism of Chinese enterprises and industries, and as a result of the economy.
Yeah, and there are other important structural changes. The aging population. China will be one of the populations in the world that will age the fastest, along with some other East Asian countries. So it will be a new period, a new phase of China's development. I think the issues you raise will play an important role, technology, business dynamism, and I'd like to understand that better. And some of the technological changes may not yield the benefits that we're looking for if the environment, including business dynamism, is not in place. If the regulatory environment is not in place, it may not benefit the population as much as previous development in China has. So these are some fascinating but but tricky challenges for the future. So I'm very interested.
Employment is another one.
Yes, yeah. Ensuring that the growth benefits the population could become more difficult with these technological changes. They could lead to greater inequality, and it's important as policymakers to look at how to ensure that it has a broad benefit.
Thank you so much, Marshall.
Thank you.